Key takeaways from the FOMC's February meeting minutes: demystifying quantum computing and tracking the dip in FDI inflows amid London leapfrogging Dalal Street. This is Business Plus, your definitive edge to business and economy. Nearly all Federal Reserve policymakers continue to anticipate an increase in borrowing cost to bring down inflation down to 2% target at the US Central Bank's policy meet. The minutes of the meeting released by US Federal Open Market Committee, also called FOMC, is closely watched by global investors. The minutes of FOMC's meeting was released yesterday, which is February 22nd. Market participants were keenly awaiting the release of FOMC meeting minutes for further clues on central bank's rate hike path. While policymakers anticipate a rate hike, they agreed on slowing the pace of interest rate hikes. There was a consensus on curbing unacceptable high inflation, which would be the key factor in how much further rates need to rise. In its battle to curb inflation that had climbed to a 40-year high, the Fed delivered a slew of 75 to 50 basis points rate hike in 2022. The central bank's policy rate is currently in the range of 4.50 to 4.75%, while it was at 1% in May of 2022. Following the release of the minutes, bond yields rose and the US dollar also advanced against a basket of currencies. US stocks saw a modest rally that later fizzled out. Globally, persistent inflation has prompted major central banks to tighten monetary policy to tame price pressures. Back home in India, the Reserve Bank of India is expected to increase interest rate by 25 basis points to 6.75% in April, following higher than expected inflation in January. The central bank had raised interest rates by 25 basis points in February. Overall, it has raised rates by 250 basis points since May of 2022. Now, the inflation in Asia's third largest economy was above RBI's upper tolerance limit of 6% for the first 10 months of 2022 and shot up once again in January, prompting analysts to change tack. And moving on, this one reminds me of Sheldon Cooper in The Big Bang Theory. Quantum mechanics apparently gets a shot in the arm, with Google AI demonstrating that it is possible to reduce computing errors using quantum computing. CEO Sundar Pichai is calling it a quantum milestone. Now, Pichai's blog post states that Google is developing quantum processors as a testbed of AI-assisted engineering as it explores the use of machine learning to improve processes. Now, what's quantum computing, you'd ask? Well, we decide to use an open AI tool, a likely case use of quantum computing, to define it for us. And here's what it told us. Quantum computing is like having a magic wand that can help you solve complex problems much faster than a regular computer. Just like how a regular computer uses little pieces of information called bits, like 0 and 1, to do things, a quantum computer uses tiny particles called qubits that can be in two states at the same time, sort of like being both 0 and 1 at once. This allows the quantum computer to do many things at once and solve really hard puzzles in a flash. In essence, quantum computing could help solve two complex problems even for supercomputers. Now, theoretically, it can perform calculations that might otherwise take even millions of years. But there's a challenge too, with encryption and data security. Coming to that in just a bit. But for now, between 2019 and 2021, China invested as much as $11 billion in quantum computing research and development. That's more than what US, UK and the entire European Union spent on it put together. What's perceived dangerous about quantum computing is its weaponizing potential. Now, according to a paper released by Chinese researchers last month, quantum computing can be used to annihilate several digital systems that the world relies on. So, it could break encryption standards that underpin global financial systems and secure communications. The paper has divided the world of post-quantum cryptography. the branch of computer science that deals with finding encryption calculations that cannot be beaten even by quantum computers. And that's where Pichai's milestone moment comes in. According to his blog, Google is working with partners to create systems that can protect internet traffic from future quantum computer attacks. The endeavor is to ensure Google Cloud, Android, and Chrome remain safe and secure in a quantum future. And moving on, after a year of record inflows, foreign direct investment coming into India has declined this fiscal on the back of uncertainty in the global macro landscape. What's more, the UK has now surpassed India to become the 6th largest equity market globally. Overseas direct investment into India declined 15% year-on-year to $36.75 billion in the first 9 months of the financial year 2023. Now, in the corresponding period of the last fiscal, FDI inflows stood at $43.17 billion. Meanwhile, total inflows, which include equity investments and reinvested capital, slowed about 8% year-on-year to $55.27 billion from $60.4 billion in the year-ago period. Now remember, India recorded the highest ever inflows last fiscal. That is financial year 2022, as the country emerged as a possible destination for foreign money looking to exit China. Experts have said that this year's slowdown is primarily driven by global economic uncertainty. They expect inflows to gain momentum once again in the coming months as economic conditions stabilize. Now, in the period under review, Singapore emerged as the top investor in India, pumping in $13 billion in foreign direct investments. The US, Mauritius, and Japan were some of the other billion-dollar investors in India. Historically, Singapore and Mauritius have dominated the FDI inflows into India, contributing nearly half of the total investment made since the turn of the millennium. Now, in terms of states, Maharashtra saw the highest FDI inflows in the first 9 months of this fiscal, followed by Karnataka. What's more is that Delhi, which has historically trailed Gujarat in FDI inflows, saw more overseas money flowing into the state than the latter. Now, among sectors, computer software and hardware sectors raked in the most overseas money, followed by services, trading, chemicals, and automobile. In a separate development, the UK has now surpassed India to emerge as the 6th largest equity market, as a weaker pound boosted the appeal of heavyweight exporters trading in London, and Adani Group-led market sell-off weighed on the stocks in Dalal Street. According to data compiled by Bloomberg, the combined market capitalization of UK's stock market reached about $3.11 trillion on Tuesday, about $5.1 billion higher than the total market cap of Dalal Street. The last time London was ahead of Mumbai was back in May of 2022. And with that, it's a wrap on this edition of Business Plus. For more incisive news analysis and cutting-edge documentaries, keep streaming News 9 Plus. Thanks for watching.